In this video, traders, we're going to look at the 5 main reasons that people blow up. Stay tuned. Hey guys, warm welcome to you. Alright, so when I ask traders, hey, you know what, how have you got on? I see this and I've blown up an account, I'm back on it. So what made you blow up the account? When you ask traders this question, it nearly always fits into these 5 that I'm going to talk about now. In my early days, when my first account got decimated, it was purely because of number 1, trading too much size. This is the big one, guys. This is the one because we all want to make money trading, and we all think the bigger we trade, the more money we're going to make, and that's true. Right? It's pretty obvious. If you're trading a big contract size or a big position size, you're going to make more money per trade than if you're trading small size. However, what we tend to forget is that we're also going to lose more money than we are if we're trading small position size. And ultimately, when we're trading out and starting out, we want to make more money. Maybe we've made a bit of progress. We start to think, let's put the throttle down a little bit, put the pedal down. But unfortunately, we don't allow then for the losers, and we're in the biggest position size and we get hammered on the losers. And because our account size is generally as well smaller when we're starting out, we're trading way too big. You know, there's people trading kind of 10% really of the account size loss potentially per day. You think, well, you're going to blow up. You know, even if you've had a 50% expectancy, you're going to blow up at some point. I did a video where we talked about, we had like this tool which had heads or tails with a 50% expectancy for heads, obviously. And very often you get 6 or 7 tails in a row over a long period of time. That's just from maths. So it is just that, guys, it's trading too much size. And I know it's tempting, I get it. We all want to trade size. We all want to trade size because that means more profits on the trades that we're right. But we've got to manage that risk and be mindful that it doesn't take much for us to wipe out if we're trading too much size. Okay, enough banging on that drum. Number 2 is overtrading. Big one, big one, big one. And of course, the combo of all of these is the perfect storm. People speak to say, I just traded too much. I was looking for stuff that wasn't there. I wanted to trade. Again, same kind of thing. We want to trade because we know we can't make money unless we're in a trade. But honestly, we start to realize that it's being patient. And even like the greats like Jesse Livermore and Reminiscence of a Stock Operator, one of the famous quotes he said was, listen, the money was made sitting on my hands, not trading. In other words, not trading stuff that doesn't fit the criteria. That's the key. And just to reiterate this point, I've mentioned this before. If you don't believe me, go back and look at all your statements and work. If you took out the top 10 losing trades, or the top 10% of your losing trades, where would your P&L be? My bet is it would be seriously significant. It might even be in profit, because those big, heavy losers are the ones where you're over trading, you're trading something that's not there. And it's a very common theme, guys, you overtrade. Right, number 3, revenge trading. This is broad. We know that this covers a lot of things, but revenge trading is really all about, hey, the market doesn't care what you're doing, right? It doesn't care. It doesn't care where you are, doesn't care how you've lost money, how you've made money, none of those things. What it cares about is 0. And so when you revenge trade, we're trying to get back at something that really hasn't got us. It's us. You're revenge trading against yourself. And I get it, right? You have losers in a row on one instrument, whatever it may be. You want to get it back, because the reason we want to get it back is we feel better about ourselves and we can undo the mistake, if you like. A, from a financial perspective, B, from an emotional perspective. And that's the big one as well. It might even be bigger than overtrading. People who lose a bit, have a bit of a bad run, and they want to get that P&L back to where they were, so they're revenge trading, they're fighting, they're forcing. Of course, that causes overtrading, and that causes position size increase. There's the perfect storm. That's what you've got to avoid. If you find revenge trading, get out of it quickly. Number 4, adding to a loser. Now, there is a strategy, of course, where you're scaling into a position structured, but adding to a loser is just doing it on a whim. Oh, but I sold 10 contracts here, so if I sell another 10 here, my position will be much better. Now, if that was structured, I've got nothing against that, but this is the common thing that people say, hey, I added to a loser, ended up getting devastated by 1 or 2 trades because I was in my worst trades in my biggest size. In other words, I kept adding. I was in a monstrous size. The thing just suddenly spat out. I was in a huge size. I had to get out of it, or I got margin called, and bang. And that's when you get really hammered. And that's very, very common, guys, for people who are blowing up, adding to a loser. 1 or 2 trades doing that just end up wiping out the account. Final one, 5, and it's a little bit like revenge trading, but gambling on news. So that's generally your traders don't go in and go, well, I'm just going to gamble on news. They go to that as a desperation point. So when the account is declining, that's when we're under the most stress, right? This is when these things come in. The account's declining a bit. It's off the highs. We're a little bit annoyed. We're not performing as well as we could be. What's a quick way of getting the account back up to highs? Oh, trade more size, trade more frequently, trade on news, because you get that instant gratification if you're right. It's just bad news, guys. No pun intended. It doesn't work. You end up, either if you get it right, you end up reinforcing good behavior that you can get out of a hole just by punting away on news, on earnings, or whatever it is. And if it does work, if it doesn't work, then obviously you're wiped out anyway. So watch out for those things, guys. We've got trading too much size, big one, over trading, revenge trading, adding to losers, gambling on news. I'd say those are the main things. In fact, I know those are the main things when I speak to the traders that I speak to, what's made them blow up. Let me know your thoughts in the comment section below. What the one thing really that made you blow up, if you have had a blow up already, so that other people can learn from it. Take care. See you next one. Bye-bye.